The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, so come on back here to the Diagnostic Trading Hour. This is Darrell Martin here on TFNN. Don't forget you can listen to us anywhere on your mobile phone at tfnn.mobi and on your computer at tfnn.com. You can check us out right there, live trader commentary and traders sharing their screens as the markets are moving. Well, right now the markets aren't moving a whole lot. We got the S&P up about 4 points. We have the Russell up $1.40. We got the Nasdaq up 4 1/4, and the Dow is up 24. Copper is currently looking at that right now. Copper is up about a third of a percent. We have gold up almost 1% on the day. Silver moving quite a bit, 1.7, 1.8, and natural gas pretty much about the same amount, about 1.9%, almost 2% move there on silver. We got oil right now. Been oscillating around a little bit with the oil inventories. Hopped up to settlement, came on back down. Down right now about 39 cents. And looking at corn is currently down on the day, 12.5 points. That's a big move on corn. So 2.5% move right there. We got over a 1% move on soybeans right now, 15 points. Euro dollar currently down 27 pips. Aussie dollar is, looking at that right now, down 9 pips. We got the pound dollar up 2. We have the dollar franc up 37. Dollar CAD is flat on the day, unchanged. We got US yen is currently up 11. Aussie yen flat. Euro yen down 12, pound yen up 4, and the euro pound is down 19 pips on the day. All right, so just looking across the board, let's check everything out. We had the one main news announcement. We had construction PMI last night, so maybe you were able to take advantage of that. And so let's look at the chart. Let's see how it played itself out. Okay. So right over here, we're going to go over, check out the pound dollar. And on the pound dollar, let's go in, zoom in a little bit, and check out when the report came out. It was a low impact report, and we were looking for an iron condor on the play. And the pricing was there. So it was definitely a good trade for you to be able to take advantage of. Now, the numbers we were looking at was to get in right around 1 o'clock, and really not expecting much movement between 1 and 7. So obviously we expect a little pop during the report, but basically expected it to pull on back down. And so if we measure, what were our moves between 1 o'clock right over here, grab that, 1 o'clock, and we're going to measure, what was our high marker? We got up 34 pips, which is not really much of anything. And then take it all the way to 7 o'clock. We really didn't move down much more than a few pips. 7 o'clock, we expired about 6 pips off, so 5 pips off. So you pretty much would have brought in max profit on the trade, getting in around 12 or 1, depending upon what time you got in. Should have easily be able to bring in $35 to $45 on the trade at a minimum, and probably quite a bit more than that, because you had 6 to 7 hours until expiration with the news of it in between. But just another great play, another great iron condor that you can take advantage of, and that's just buying the lower spread and selling the upper spread. So there's nothing real difficult about it. It's actually a very, very simple trade to do. And let's see here. Maybe we can put a couple of the pieces together for you. And what I'll do is go in and grab some info here on the pound. We'll sort of reconstruct the trade. And what I'm doing is I'm running into the time and sells, and they list all of the contracts on here. Okay, they got binaries, they got spreads, and you can go in and find the, which contract are you looking for. So if we're looking for, say, pound dollar, we're going to go down to pound dollars. Then we're going to find the 7 a.m. contracts and basically to see, what was there that we could use. So on the 7 a.m.s, Just zoom in a little bit more for myself here so I can see it. 7 a.m.s, we got pound dollar. And just a couple trades done right there. It looks like right before, a couple directional trades. Not a whole lot done on that trade last night, so it looks like people missed out. But anyways, yeah, just like I said, digging into that specific trade. And then to get the actual, this is pretty cool. If you go to nadex.com/results, that HTML, and what that'll do is it'll actually tell you all of the, basically the settlement values, okay? So right over here, you can go in and you can actually find, so we can go like, okay, well, I want to look at, say today, and reload that page there, and it'll show me, the pound dollar, it'll show me, what prices it settled at, and I can click right here, it'll load up the daily bulletin, and then open the page up, and then go down and go, okay, now let's find pound. So I got to scroll down a little bit of a ways because there's a lot of contracts every day on Nadex. So pound dollar, and then we're going to find the 7 a.m. So that's going to be the binaries. We're going to want the spread. So you go a little bit further. Let's see here. We'll keep going down till we get down to the spreads on them. All right, there we go. So there's pound yields. Okay, now we're on pound dollar. Now we want 7 a.m.s. And this will have each one of the expirations laid out for us. So we got pound dollar. We got, 1 p.m., 2 p.m., 3 p.m.s. Trying to see if we got 4-2 up yet, if they've uploaded those. On the 2nd. Yeah, that's yesterday's daily bulletin. So I'd have to go back and I do have them. I actually record them every single day. So I record every single daily bulletin, all the details, the summary pages, the time and sells, because we're working on building that into the scanner to actually make historical charts for trading, historically to do market replay for testing. But anyway, so for a simple summary, I can tell you, just knowing basically how the contracts work, that we would have had a spread. Actually, I can see one of the spreads right here on one of the bulletins I'm looking at. You would have had a 66.30 or 63.30 to 66.30. So that would put us also at a 66.30 up to what they're 69.30. So pretty high up. I mean, it's been a very, very wide spread. But you've been huge out here, 66.30 to 69.30. And you would have got on that trade, let's see here, if we go in, I mean, you're talking about a box right here, like going way up, and you got a box right here going way down. I mean, like way, way down. And really what we were doing is we were selling pretty much right about here, and we're buying right down here. And if it will go in and it will expire, in between that, we're really making quite a bit. We're still making money actually as long as it covers the other side. So, let's just do a mock-up on an iron condor and just go through it with you, because this is literally just how they work, and it's one of my favorite trades to do. I did this the other day on natural gas. And it might be actually a really good way to teach you, because the benefit of showing you natural gas is there's usually so much premium built in and inflated into natural gas that, you can iron condor the things like a lot. But let's see here. We'll go in. We'll see if we find any good potential lower risk ones that we can do. And if we can, then what we'll have is a good combination for putting these together. Let's see here. Just trying to find some low. There's really nothing just lining right up on natural gas right now to show you this. So let me try oil. See if we got anything on oil that might line up well. See the price right now on oil is right around, let's see here, let me pull this up. The price on oil is currently trading right at 99.35. So if I can get a 99.35 935 floor ceiling, maybe even close to that. There's a 9950. Okay, so that might work out. And then let me see if I can find one on the other side of that. 9950 and 9950. There we go. Yeah, there's no premium in that one. I'm trying to put one together for you that will really show you the value of the iron condor. But we're closing in on the end of the day, and there's not really any news in between now and the end of the day, so therefore that's what makes it a little more challenging. Okay, so we'll go back, and I'm just going to reconstruct one for you and show you exactly how it works. If we were pre-news, you'll see me do this, by the way, this week. I'll go and I'll do it on NFP, so that's one of my favorite times to do it. FOMC is another great time to do it. But anyway, so looking at this right here, going into this report, then we'll just say we're picking, and I know it'll be a little bit wider, but we're just going to go with 100 tick wide to make it easy for the example, okay? And so let's say we hop in here, and we'll just say we hop in at 3. So you could do that. It's 3 and to 7. Okay, and we're right at about 66.30, so we're going to take it up to like 67.30. Okay, so this is going to be like the spread that's above the market, but we're going to do something different. Instead of buying it, we're going to sell it. Okay, so it's sort of opposite of what you'd think you would do. And it seems like it's really high risk until you get right into it and you realize it's not near as much risk as you thought it was. Now we're going to go over here and we're going to take the lower one and we're going to take that one. That one's going to be from like 66.30 down to like 65.30. Okay, so we'll bring that down here a little bit lower. Right about there. Okay. And this is the one that we're going to buy. Okay, so we're going to buy this one down here. We're going to sell the one above it. So we'll just make that one green for the moment. And when we go in and we buy it, since it's at 66.30, okay, let's say we buy it 20 ticks lower. So if it's a 66.30, there's going to be some premium in there. So if you're selling it, you'd be like selling it for 66.10. We're going to buy it for 66.10. Okay? So if we buy for 66.10 right there, and what I'll do is I'll open up a calculator, and if you get these down, they'll end up becoming one of your favorite trades on Nadex. It's sort of a sit there and do nothing, low management trade. Okay, so we're going to make 20 ticks, potentially, on this lower spread. And we're going to go and sell the upper one for 66.50. Okay, so right up here, 66.50 at the exact same time. All right, so we'll be right back after this break. We'll start putting the pieces together for you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. All right, so we're looking at putting on a iron condor, and we're looking at the profit level on both sides. And what we're doing is we're saying, hey, we're basically buying 20 ticks below the market, we're selling 20 ticks above the market, because if we were doing a straddle, we'd be paying like $40 for this thing. Okay? So versus what we're doing here is we're actually getting $40 for it. Instead of paying it, we're receiving $40. And when you get it at first, you're like, this is nuts, because I'm risking like 80 or 130 or, whatever pips. But what you realize is, wait a minute. Okay, so I'm risking how much? Well, it seems like I'm risking 80 because it's a 100 pip wide spread. I can make 20 pips. Okay? So I can make 20. It's 100 wide. The most I could lose is 80. This isn't a binary. It just happens to be 100 wide. Okay? And it's a variable payout. So if I buy it at 20 ticks below and it expires at 10 ticks below, like that's actually like the pound dollar expires right here, then I'll make $10. If it expires at, there's 5 ticks below where, the floor is ceiling right there, I'll make, $15 because it'll be closer and closer. The closer it gets to the center, the more I'll make, because the most I can make is right here I'll make 0. Okay, and then $1, $2, $3, $4 as it rises up right to the center, then I'll make $20. Okay, that's the most I can make on the trade at expiration is $20 on the trade, on that side of the trade. And then I'll only lose $1. So if it goes, say, if it expires 21 ticks below and I I basically got 20. I had to pay out 21. If it expires 10 ticks, below where I bought, so 30 ticks below here. Well, I got 20. I had to pay out 30, so I lost 10. Okay, so it's a variable payout. Like anything, there's where you buy and you sell. That simple. Okay, so where you buy and you sell, that right there, or where you buy and it settles, that's going to be your profit on one side. Well, if I can make 20 on one side and I can make 20 on the other, that means I can make 40. Well, if I have an $80 risk on either side, okay, well, I don't actually have a full $80 risk because let's say if it goes down, remember this one will make money as it goes down, right? So if it expires down here, I'll make the full 20 on this one. I won't lose the first 20, but let's say if it goes down, 20 ticks. Well, I made 20 here, I lost 20 here, so I'm break even. Okay? And, okay, that's not too bad. So now what you're telling me is if it stays in this 40 tick range here, I'll make max profit. But if it goes up 40 ticks or down 40 ticks from the center right here, from where we got in there, down 40 ticks, I'll be break even on the trade. And if it's anywhere above or below these break-even lines, I'll make money. That's 100% correct. So for every tick it's above the break-even line, you'll make $1 up to $40 right to the center. For every tick it's below, you'll make $1 right down to the center up to $40. Okay? Because you'll get max profit. You'll get the profit of $20 on both sides if you're right at the center. So we got break-even is literally 40 ticks above and below the market. Now we have an 80 tick wide area. Okay, understand right here, this break-even on the Iron Condor is also the break-even on the straddle. It's the exact same. Why do I bring that up? That means, okay, this is where you start losing money on the Iron Condor, right? But you're making money everywhere in between. On the straddle, this is where you start making money. This is when it breaks out of this level. But you're losing money in between. So straddle would be where you buy the upper and sell the lower. Iron Condor is where you buy the lower and sell the upper. Okay? So you're collecting the premium versus paying the premium. So now instead of having an 80 tick wide break even, okay, now I have 80 tick wide like loss zone if I'm doing a straddle. That's why you'll start to like them more than straddles. And if it goes above this zone, then I lose $1 a tick. Okay, well, if I can make 40, I could go 40 ticks above it. So it could actually go up here almost to the very top. Okay, just like, 20 ticks shy of the very top and 20 ticks shy of the very bottom. And that basically gives me actually more than that, basically 160 tick wide range for a 1-to-1. Meaning, like, if it moved up 80 ticks on something I don't expect to move more than 30 or 40, and like only once or twice it's moved 50. If it moved up 80 ticks, I'd then be at a 1 risk to 1 reward, max risk to reward ratio on the trade. So the probabilities are really starting to stack up by doing this neutral trading. Just throwing these things on before news. It's very, very cool. All right, stay right there. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come back here to the Diagnostic Trading Hour. And so, again, going through the iron condors with you. And we're talking about, okay, so if I can make up to 20 pips here, I can make up to 20 pips here, I can make 40 pips if it expires right in the center. If it doesn't, I'll make one tick less than $40 for every ticket goes above, one tick less than $40 for every ticket goes below. So, if it's one tick, every ticket's below the center or above the center of the iron condor here, I make one tick less than my max profit. Eventually I get to 40, which if I'm bringing in 40 means I'm at break even. If every ticket goes below that, I could lose $1. Okay? So, and now, I could basically lose money on the way down. So I can make 20, lose 20, break even, and then we got, okay, so what is my max profit scenario? And it's way down here where I have this massive, massive range, and to get just a 1-to-1 risk reward, which is perfect. That's what you want. And these trades are just working out time and time and time again, more often than the big moves. And the big moves, here's what I found on the big moves, because I was doing a lot of straddles, and I enjoyed them, and I did well at them. But you basically had to go in and you had to take that profit really quick to get that 1-to-1. Like you went in and you bought the other one, sold the lower one, and as long as you called the right ones, because if you got this right here, then you're just trying to figure out how to get out at break even. Okay? But if you went in and it flew up, and you got that big bolt of a move, and you took the profit, if you didn't take the profit, the thing would fall back over and over and over again. I mean, there was every once in a while, like literally like maybe like 1 in 10, 1 in 12 times, like it would just keep going. And those are cool because those can be big profit days and all that stuff. But most of the time, it either didn't move or it came back after it made a move. And so the more I started thinking about that, I'm like, well, wait a minute. Well, if it doesn't move, or if it comes back after it makes a move, then instead of trying to go in and perfectly time that exit and try to grab that break even on the straddles, I may be a lot better off just going in and doing an iron condor and just collecting that premium on it. And it works great. So I hope some of y'all are picking this up, and, are willing to go start playing with it, because you will be amazed by how well it works. And it's so much better than butterflies on binaries. You can find butterflies on binaries. You can find the premium on them all the time. And I understand you may not be able to find the premium on these all the time. You can find them every day. Whether or not you can find them every hour, stuff like that, you won't be able to find that. But the big difference here is on these, you don't have that big win-loss issue going on. Like on a binary butterfly, yeah, you know what? If it expires anywhere in between that range, you get max profit. But if it expires one tick out of it, you get slammed. You don't just lose a buck. And so your risk-reward is really volatile. It's very leveraged. And whereas the condors are just simple, easy, put them on. It's not like you get hit and you lose $70. You get hit and you lose like 2. Okay? Maybe you made 10, maybe you made 20, maybe you made 40. But rarely you're going to lose like all $40 when you do these. So, anyways, it's a really simple trade, and you just got to go in and start playing with it, and you'll figure it out really quick. And to get it going, what you're going to want to do is you're going to hop on over, grab TFNN.com, and click on the Nadex banner on the right side of the page. From there, click on Trading, Demo, Trading Account. And fill in the username, first name, last name, phone, email, all that fun stuff. And then, when you're done with that, check your email instantly, and you'll be able to log in. And right here, demo account, username, password, once that's done, okay? And then under create account, you can open a live account if you fund it with at least $100 and place just one trade. Now, it doesn't matter if you place 100 trades or one trade, worth $3 or $3,000, whatever. Doesn't matter if you make or lose money, whatever, If you just place a trade in a funded account with at least $100 in it, you can call Nadex up and they'll extend that demo account out for you for a year with $25,000 of, play money in there so you can really get it down. And then, of course, I have the education over here. You can check out, Diagnostic Box Spread Analyzer. That's where I go through and I have the binary and the spread scanners. You can also check out their YouTube channel over on youtube.com/Nadex. Tons of education there that you can look at, okay? Trading strategy videos and things of that sort. So there's a lot of great education. They get the webinars. And, we'll be doing some more stuff as well right here on TFNN. But just to make sure, you get access to those basic resources. Get started. Call in if you have questions. Let me know so I can help you out. And we'll get you going. But these are just very simple income strategies to do that you can do every day. You don't have to wait a week or a month to collect premium. So you can do it in hours. You can do it while you sleep. You can do it at night. You can do it in the middle of the day. There's all different times you can do it. You can also do directional trading. So there's a lot of different ways to trade Nadex. Just pick one, master it, go to the next one. Okay? Okay. And let's check out, I guess, the last piece on the list here. So let's dive in to our upcoming news. We had the ADP non-farm payroll and all that stuff. Not necessarily the biggest trade that we usually dive into. The big one is going to be NFP on Friday. Okay, that's our trade. And also, I wanted to look at just the crude oil inventory. We had the report come in at negative 2.4 million barrels on an expectation of 1.3 million barrels in oil inventory. So let's go ahead and pop that one up. Look at that. And like I said, I am working on actually getting into this a little bit more on the oil inventory report. It comes out at 10:30. And so got a pretty mixed immediate response over here. Let me open this up. Yeah, there we go. So right there at 10:30 is when it came out. We actually got a little bump later. And what I'll do is I'll look at my deviation levels, sort of see where that's at, because that gives you just such a clear thing. There's so much you can miss basically miss out on, just not see. And so check this out. So not only did they have the report, but look what it came right up to. It came right up to settlement and then bounced right off of it. Okay, so I mean that was just that line right there, that settlement line, major heavy line, and obviously it was doing that all night, so that's where it ended yesterday. Came back, bounced, came back, bounced, came back, bounced again, right back off of it. And so just understanding that those lines are there, and that's not it's not some magical line. That's a settlement line posted on the CME's website. Okay, we also post them inside of our scanner, and we post, of course, the deviation levels, which are based on implied volatility. Now, what I'll also look at is I'll look at actual volume versus expected volume. And by seeing that, I can sort of basically get my confirmation of maybe when it's burnt out, when it's done. And so right here on oil trade, this is a trade that, me and some other traders were putting on today and, going over. And so you can see, volumes just going up, just increasing right here to 1130. This bam, 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 boom, hits settlement. And right after it hits it, closes down. And let's see, what is our actual? Actual was actually a little higher than expected. We actually got more volume than expected on that down close. So that's a very strong short confirmation, especially coming off a settlement after a big up move run like that. So now we got a short trade we can go into right at the end of the hour. It's an easy binary quick premium collection trade right there. Right after it breaks the low as your confirmation. So like 99.56 on the indicative on Nadex right there. You go and you go short. And, I mean, it was a close trade, but it's a trade that definitely worked. And again, it called the direction. And market, moved on down. We had a little bit of a pullback right there, but it's pretty much a doji. Doesn't mean anything at the moment. Runs up, but doesn't break the high. So pretty weak, doesn't mean much of anything. Then starts pulling on back down. Now we're starting to break some volume, getting a little bit of a, a little choppy mess. I mean, this is a little bit of a hard hour right there. There's not a lot going on you can take advantage of unless you're just doing a classic reversal off 75%. And going in, just looking at the rest of the hour, then we come in, and we'll zoom in a little bit more on this one so we can see a little more clearly. Comes on down. Okay, this is something I like to see here. We get this volume break, and then again we get an up close right after that. That's a strong buy. That's right off the 0.5 deviation level. We've been bouncing off that already. So right here, very strong buy signal. Waiting on some sort of confirmation. Finally, it does break out, but that's a great potential buy trade right there. And we're basically down at the expected range with volume closing up. You don't have to wait on the confirmation, but if you don't, then often you will get head faked out. And so you just got to be ready to, if you're going to do that, just be ready to get hit on the trade, because a lot of times that will happen. Other things to look at are just the close to close. We're coming up on the close here, right? So what is the close to close expectation? How often does it usually move on that? And so if I go over here and mark this, put close to close up, then what we're going to see is that we're a little bit below that close to close expectation. Right now, usually we expect it to close. What do we got? About 16 ticks off. Right now we're 11 ticks off. So we actually would expect it to drop down about 5 ticks from where it's at right now, between now and the end of the hour. So it's just, it's a lot of stats. It's just putting all the stats, all the details together. And by doing that, we're able to, let me see if I can change this over, make it a little easier to read as a bar type versus a line. There we go. Okay. So right there. And then, we can see how we're not quite at the level yet. And so we're basically expecting a pullback at this point. It's not closing, above it, below it. We're just waiting on it to close right on that level. But we got a few tick pullback, not a whole lot of strength left going into the end of the hour on oil to be expected at this point. Not saying it's going to fall. It's just, few ticks up, few ticks down would be my expectation over the next 10 minutes. I wouldn't expect some big 20-cent move in either way going into the end of the hour. And you can actually see right here on these range plots, you see how it's starting to pull back down right there? Like that's basically right where we expect it to pretty much try to close, right on pretty much the level it's almost at right now, a couple more ticks down. And right there is where I'd actually expect the market to close. So you can see right here, like it went down, it went up, and I expected it to close right here, and that's where it closed. Same thing, go back another hour. You know, went down, went up, went down, went up, went back down, closed right there on the expectation to close. So it's not that it's always going to happen. I mean, that'd be beautiful if it did. But it gives me an objective expectation that's forward, not historical, forecasting. So I'm not like waiting on something to calculate something. It's telling me, hey, this is where to expect price to move to. And there's a lot of different plans you can do with that. Of course, you can trade that directly as just an outright trader, but also Nadex. I mean, there's just a lot of different pieces you can look at with it. And part of it, I'd be looking at volume. Okay, I just had to run back up and almost at 75% over here. So if we got a little bit more, that'd be nice. But when we got that high volume bar, now we got a down close. If we break down below that, that could be an easy premium collection trade to go short into the end of the hour. So there's a lot of little ways to, put different pieces together. But I just want to show you a couple of them. And, the iron condors, what I like about the ranges is I can use those to go, what expectation do I have, or the straddles. For instance, we go in and we look at news. The news report comes out at 10:30. So what I will do is I'll go in and I'll go, okay, what is my expected movement on a 30-minute time frame? So after it comes out, what is my expected move? And I'll pull that up on my volume, my ranges, everything, my close to close, all that fun stuff. And then when that's done, I can actually go, okay, well, my expected move from 10:30 to 11 is, this range right here. And that'll let me see if the strangle or the straddle or the iron condor, because, this news report comes out at the same time every week. Okay, and this is based on Wednesday. Every Wednesday at 10:30 to 11 is what it's looking at. Okay, this isn't 10:30 to 11 every day. It's 10:30 to 11 every Wednesday. And so this tells me what to expect during this half hour after the news release. And I can do an hour, I can do an hour and a half, I can make it start and stop whenever I want it to. I'm just doing a simple, half hour. But it lets me know what to expect, and that lets me know, hey, is that strangle a good idea? Am I better off butterflying? Is that iron condor a good idea? Am I better off, doing a straddle? So what should I expect? And you can see it popped up, popped back down as far as expectations on movement go. On the high to the low, we hit about 75% of the expected move. And you can see not only did it hit it, but then it had that strong pullback on that close. And this is an up close. This bar came down, flew up, still closed up, came way down, came back up. And I don't remember what you call that, falling star. I don't know, there's some weird name for it. But anyways, it's a bar that has strength to the upside, obviously. And so 75% right there. And you're looking at the close to close. We basically finished right on the close to close. So it really sets you up perfectly for pulling this trade off on the oil inventory report to give you the information you need to know of what's better, straddle, strangle, iron condor, or butterfly. The more you put those stats together, easier these trades become. All right, I'll stay right there. We'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so what do we got going on tonight that you can trade? We have the Aussie dollar retail sells. And what we want to look at on that is usually what happens is it pops like in that first 30 minutes and then it pulls back, okay? And I think like maybe once, if any, in the last 12 months, we've even had a 50, let's say it's like one time in the last 12 months. I'm just trying to go through and pull all the reports up and look at the, by 11 o'clock, there has been some big moves, but they're usually not like early on in the day. So let's see here, 11. Yeah, by 11 p.m., we don't really have big moves. Even on the couple big move days that we've had, they weren't by that time. And so what happens is it'll pop up, and then it'll pull back. And usually that massive pop is literally like right on the news, not a big surprise. And then, it takes it about till... I'm just looking at it right now. You're about to 11 usually to get that good ideal pullback on the trade right there around 2,300 hours. And you may be able to do it sooner, but 2,300 usually just across the board, as far as consistency, is giving you the best pullback. So what that means is going in, we want to basically an 11 o'clock expiration. Now you can enter as early as 6 or as late as basically 8 on the trade. Okay, looking at the 11 p.m., you could do the 10. PM expirations. I would not do the 9 PM expirations because it just doesn't give it enough time to pull back. And so we're going to look to bring in like $30 to $50 between the two sides. Your max profit on both sides combined, about 30 to 50. And if you choose that 9 PM one, then what's going to happen is it's going to pop, and then you're not going to get those minutes you need for it to pull back in your favor. And since you don't have that, then you can't really be that profitable on the trade. And so you'll probably bring in 35, and then you'll maybe make $5 on it. So what you want to do is bring in 35 and make like $25 on it. So you want to give it time to pull back. And so suggestion would be to focus on like the 10 o'clock or 11 o'clock expirations. If you're doing the 10 o'clock, hop in at 8. If you're doing the 11 o'clock, you could hop in at 8, or you could hop in as early as 6. The benefit of hopping in earlier is you're going to get more premium. That should be offset by the fact that you're also going to have a little more time for volatility. So just be aware of that it could move 10 or 20 ticks between 8 or 6 and 8 o'clock. So I've seen a number of times that's actually happened. So it really seems to settle down. Trying to find, I guess about 6 going into it. I'm just trying to track it down and find that best ideal entry time, which is going to put you pretty much 1800. So yeah, you ought to be pretty fine entering at 6. I'm just looking across them. Just remember, there can be a little bit of movement there. So if we're talking about having an average of about 15 to 30 tick move between open to close, release to close of the 11 o'clock, that's more factoring from the release. It's not factoring from hours before. But again, the hours before give you more time. So make your choice. Maybe put on one at 6 and put another one on at 8, and spread your risk out a little bit. Might do one iron condor at 6 and one iron condor at 8. You can look at the 10 or 11 p.m. expiration, and between those two combinations, so we got 8 to 10, 8 to 11, and say 6 to 11. Those would be your 3 choices. And out of all those, I imagine all of them would come out well. But we'll look at them tomorrow and do a review. And again, that release comes out at 8:30 tonight. All right, we all have a great day, and we'll see you right here tomorrow on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.